But the point being is, I don't believe they're going to gift us the chance yet again to buy an asset down 90% and give us a 30 or 40x return every time we go back to the casino. I mean, it's hilarious, the opportunity they've given us. And if you've taken it, it's made enormous life-changing profit. That's my biggest fear, is the damn thing goes down 40% and we're all caught offside waiting for the last leg and we don't get it. That's a bigger fear. It's not, and this is why I don't want to be trapped out of the market either. A lot of people fear getting trapped in the market. My fear is being trapped out of the market. This is the largest wealth-generating machine humanity's ever been given.
In a recent episode of the Real Vision podcast, Raoul Pal delves into current market dynamics and shares invaluable insights from his personal investment portfolio. Drawing upon lessons from previous market cycles, Pal discusses effective strategies for navigating the rapidly evolving cryptocurrency landscape. At the time of the podcast, Bitcoin's price was reported to be hovering around $70,000, having experienced a 2% increase in the past 24 hours and a substantial 10% growth over the last 30 days. The current Bitcoin circulation stands at 19.71 million. As conversations about the institutional adoption of Ethereum ETFs gain traction, Pal explores the potential implications for the future of cryptocurrency investments. Tune in to hear Raoul Pal dissect these crucial topics and their far-reaching consequences for investors.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Everybody has PTSD because the last cycle was stunted. For whatever reason. It started earlier, more aggressive because of what happened. There was the 2020 shenanigans and then the FTX. It was more stunted. That's what my view is, and it caught many of us by surprise. Would I have done anything different? No, I wouldn't have sold a penny anyway. So it was not in my thesis. I have a long-term thesis. Jeff Bezos is the richest man in the world, not because he traded his stock. It's because he didn't trade his stock, right? I know it's antithetical for most people, but it is really the way to get rich, is just do nothing. But we all live in the real world and we want to cash in some lifestyle chips and we want to, make sure that we feel like we've achieved something out of all of the hard work that we've put in. So my view is I'm just going to use time. Somewhere towards the end of this year, I'll take a third off. Then I don't give a shit. And then if we have a super cycle, I'll take another chunk off. But I don't know what to do with that money. I don't really need to do anything else. So it's just sit in cash and wait for a bear market and hope it happens. God forbid if it doesn't happen, but at least I'll get some exposure. This is why, if you can avoid trying to do too much, in 7 years' time, you will thank yourself for not having done it. I've done both. I've sold out in 2017. The other thing is, let's say your $1,000 is now worth $1 million and you sell out and you nail the high, you're within 20% of the high, brilliant. Market collapses down 90%. You will not put your $1 million back in. You can't do it. Even though it's de-risked, nobody can do that. And so which case you will under-allocate compared to what you would have had. It's weird. The psychology of investing, particularly when this is a high-stakes game, we've all got lots of our net worth tied up in these bets. The psychology of investing is really hard. I don't think the perpetual money machine overcomes cyclicality. Liquidity in, liquidity out. I don't think you can avoid it. So it's such a dominant force that if the Fed have to, and the other central banks have to reduce liquidity at the end of the cycle, which they almost always do, it will hit the assets. Firstly, for most of the liquidity formula, it matters not about rate cuts. Cast your mind back, 1994, the bond market blew up. Similar, not less extreme, but it was very extreme at the time. Everyone thought we were going to get a recession in 95, 96. We didn't. We skirted it. And what happened was the Fed cut once or twice, 25 basis points, 50 basis points, and then didn't do anything until 1998 in the Asian crisis. The NASDAQ went up 170% in that period. You just need stability. You don't need, .com, we've got the same backdrop that, of AI and everything else. You don't need rate cuts. You need liquidity. and you need stability. And even if liquidity stays the same, but you have stability, it gives people the ability to take risk. So I'm not worried about it. I don't think anybody knows how it plays out, but I know that Europe has to and will cut rates. The UK has to and will cut rates. China has to and will cut rates. And if they're not careful, the dollar's too strong. So the US has to do something about it. So the only answer is liquidity. And let's say by not doing something, they torch commercial real estate, which is going to happen anyway, right? It's a slow death or an instant death, whatever way. The answer is always more cowbell. So whatever happens, the answer will always be more liquidity, which is why this is the most lopsided, asymmetric, macro risk-taking environment in all history. Take it off the table. This is everyone's obsession with the death spiral. These people are not stupid. They know the game. You don't know the game they're playing. The game they're playing is, we will keep this game going forever because we have all the tricks up our sleeve. And once you've figured out that quantitative easing is printing of money, we'll change the bank regulations. And once you realize that we can't put the commercial real estate in our bank, we'll create an SPV and put the bad loans into it. Once you realize that they have all of the cards, but one thing they're motivated by is they are politicians. They will not allow the debt spiral.
As we heard Raoul Pal's investment strategies and his current portfolio moves, let's now delve into his thoughts on the Ethereum ETF and BlackRock's involvement. Pal highlights that BlackRock's entry into the Ethereum space through an ETF is a significant milestone. He suggests that this move could bring legitimacy and increased liquidity to Ethereum, similar to the impact of the Bitcoin ETF. According to Pal, this development could accelerate mainstream adoption and solidify Ethereum's role in the financial world. What could this mean for your investment strategy? Let's listen further to Raoul Pal's insights on the new Ethereum ETF.
There are ways that they're doing order flows that don't mean open market buying. So there's ways around it. Look, I know most of the people who have built these ETF businesses, they're straight as a die. So, and they're in the mission. Is there manipulation? There is, having been at the epicenter of the financial system, there's always somebody trying to make a price and take a price. There is no grand master plan for manipulation. Wait till the options come on these things, and then it becomes more complicated. The more participants there are, the more complicated that world becomes. So I think it, like you, it's a net positive. I think it's hilarious because at one level, I think the SEC and the authorities and the financial system think, well, we're going to control most of these assets and we can use our usual channels so we can maintain our fee structure and our control. How I think of it is it's a Trojan horse, because before you know it, you buy Bitcoin, then you're seeing that Solana's going up more. You end up opening a Coinbase account. Before you know it, you're self-custodying your Solana and aping into WIF. That's the journey. We've seen them all do it. They'll start with a Bitcoin ETF. And before you know it, they've got a bag full of WIF in their phantom wallet, and their worlds will have changed. So I think of it as a Trojan horse. They think they've won control. I think they've actually lost control. On a long-term basis, number go up. So I'm not fussed about that. The path is interesting. I think it's going to be defined by how BlackRock define Ethereum. Right? You and I have been in the space for too long. We know what Ethereum is to us. We know what it is. We know how it positions versus other smart contracts. We know the breadth and depth of the Ethereum ecosystem and how good it is. We know its failures. But here's a bunch of people coming into the space, call them RIAs, and they need a sales pitch. And they've been given, here's a cryptocurrency, it's Bitcoin. It's kind of your life raft, it's digital gold. Okay, they bought that. So BlackRock are not stupid. They have no interest in going to sell, here's another cryptocurrency, which would fail. So I'm really interested in the narrative they craft, because this has a potential to change the entire crypto space. That's how big this ETF is. And not necessarily from a flows perspective. I'm sure it'll decline over time. But more from what is the narrative of the space. And my guess is we're going to build the world on we're going to tokenize the world. And Ethereum is the platform to do it. And if they sell that, and we know every single investment bank has been building teams internally for years and years. ETH now gets regulatory clarity. there's going to be a raft of product coming out of finance system. But let's just talk about ETH. It's the settlement layer that interests them the most, and the fact that you can then build layer 2s. So here's something really interesting. Most people don't realize. I was in Switzerland speaking to one of the investors in the asset management company, and she's one of the senior traders for Louis Dreyfus, the commodity trading house. She trades ags, soft commodities. And I'm like, well, you're investing off my fund. I'm surprised you guys don't use it internally, like stablecoins internally, because you've got operations in Angola and wherever, everywhere in the world, and you need to move money around. She goes, yeah, we do some of that stuff. But all of the agricultural commodity trading houses built a blockchain on top of Ethereum 4 years ago. I'm like, what? She goes, oh yeah, all our letters of credit, our shipping, our quality standards, this is this crop and this, all of that. It's already on blockchain. We use this in this instant efficiency. I'm like, huh. So if you think about that, what you've got is the settlement layer, the database, the super secure database that is ETH. The speed and everything of that bit, we've kind of proven with the layer 2s or layer 3s, doesn't matter as long as the settlement layer is there. So I think for them, it's actually perfect. And what we find confusing with the endless layers will make total sense to them, because they can create their own layer, settlement layer for equities, let's call it, and it can settle at the ETH layer. Okay, that's a big deal.
As we wrap up our discussion with Raoul Pal on the potential of Bitcoin ETFs and Ethereum's institutional adoption, it's clear that these developments could significantly reshape the crypto landscape. Raoul highlighted the transformative power of institutional interest in Ethereum, drawing parallels to the evolution of other financial innovations over time. We'd love to hear your thoughts on a couple of key questions. How will the potential for long-term wealth accumulation in Bitcoin ETFs impact market stability? What are the implications of Ethereum's growing institutional adoption for the broader crypto landscape? Share your views in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.